What's up guys, Chris Rivera here, founder of the Ecommerce Accountants. I hope everyone is doing well. In today's video, we're doing a follow-up to our two-part series of US tax planning for foreign e-commerce entrepreneurs. Again, this is non-US citizens that have tax structures here in the US. Specifically, the structure we're going to cover in this video is this C Corp Blocker Corp. That's the really cool structure. I'll show it on the screen here. The reason why we're covering this structure in this video, one of our clients had implemented the structure and it was actually audited by an IRS auditor, and the structure passed the test. Basically, the IRS auditor allowed for it to operate as is. Now, luckily, this entrepreneur had their ducks in a row. Their documentation was super organized, which is very important because the IRS auditor was not going to allow the structure unless certain things were in place. And we're gonna cover all of those topics here in this video. So before we proceed, if you find this content valuable, please like, subscribe, give us a comment, and we definitely enjoy your feedback and would love to provide you with similar videos in the future. Without further ado, let's hop into my tablet here and we'll go over what specifically the IRS auditor was looking for in this structure. All right guys, welcome here into my tablet. This is the C Corp Blocker Corp structure. Here, you can see it. The idea here is, just as a reminder, we have a US entrepreneur that owns 100% of a US corporation and 100% of an Ireland corporation, just in this specific example. Our client was actually a South African entrepreneur that had a South African business entity here. This structure works with other countries, just as an FYI. The idea here is obviously the US Corp operating company was paying management fees over to the South African, in this example, an Irish company, and management services were provided to the US company. Now, the IRS auditor, when we went through this structure, what they saw was on the US side, which is the entity they're looking at, they had deductions for payments going to South Africa. Now, they were completely cool with this structure as long as this part of the agreement was intact and this entity was reporting income that was deducted by this company. Now, here's the documentation specifically that they were asking for. The first thing they wanted to see was a contract. So basically the idea is if you're providing management services, there should be a contract for those services. What are those services? Advertising services, management services, that kind of stuff. So as long as the contract was in place, that was one of the things that the auditor was looking for. The second thing was invoices and payments. They wanted to make sure that actual money was flowing from this company over to this one. And the idea is that there should also be invoices. These two companies should be operating independently. It's two separate entities that are operating two separate businesses. And then the third thing that they were looking for is, did this entity, the Irish entity, or in our client's example, the South African entity, actually report the income on the tax return? This was a crucial part of it. The client actually didn't, by accident, report the income on their South African tax return, but what they did was they amended their South African tax return and actually did include these fees. And basically, once the IRS auditor saw that the South African tax return included that income, the deductions that were deducted in the US were included in the South African tax return, the structure entirely was allowed. Okay, so now that you get a feel for what exactly the IRS auditor was looking for, some resources that we can offer you to help is, number one, we have a management services contract. Now this, I highly recommend that you run by a lawyer, make sure you fill it out, dot your I's, cross your T's, make sure things are safe, but we'll give you a template management services contract that we actually share with our own clients. The second thing we'll include is a just random invoice template that you can use. So again, if you look through our example, the first thing the IRS auditor was looking for is that management services agreement. The second thing that auditor was looking for was invoices and the corresponding payments. And that pretty much wraps up our content here. As always, if you find this type of content valuable, please like the video, subscribe, leave a comment with your honest feedback, or leave a comment with any questions you have. We love hearing from our followers here on YouTube. Have an amazing day, everyone.